Right, thanks, Tony. As I say, I'm Seb Maley. I'm the Operations Manager at Qdos Consulting. Qdos provide insurance and advice services for taxation, employment law, health and safety, and we've got a long history in dealing with status issues. We've dealt with over 1,300 IR35 inquiries, and we've only lost 2, which is obviously a very good track record. And off the back of our expertise, we've built various insurance products and consultancy products to cover contractors against the risk of IR35, and we've currently got around 20,000 contractor and freelancer clients on our books. I've personally been with Kudos for nearly 10 years, and obviously I've seen the industry and IR35 develop dramatically over that time. I've dealt with many IR35 cases myself, and often have lots of exciting tax stories to go home and tell my wife about. She doesn't really like me, doesn't like me very much at all. I also run Contractor Weekly, which is an online newspaper for contractors and freelancers with over 12,000 subscribers, and we report predominantly on IR35 and are really seen as one of the key publications amongst contractors at the moment. I'm sure you're all aware of IR35 and the basics of it and how it works, but in case anyone isn't, I will run briefly through the basics, so please bear with me if you know it all already. IR35 is the name commonly given to the intermediaries legislation, which was introduced on the 6th of April 2000. The legislation was designed to combat the use of personal service companies where the worker should in fact be an employee of his end client, which is known as disguised employment. Working through a limited company obviously gives significant financial advantages. By drawing a small PAY salary and high dividends, the worker will pay far less in national insurance contributions, saving around 26%, which obviously HMRC don't really want. Prior to the inception of IR35, there was a lot of abuse of the use of personal service companies. You often hear anecdotes of people like Tesco shelf stackers who had their own companies and obviously drawing dividends, and therefore it's obviously something that HMRC really wanted to crack down on. So IR35 was brought in, and there were massive numbers of IR35 inquiries in the first few years. Broadly, considering whether someone is inside or outside of IR35 should be common sense. If somebody acts like and is treated like an employee, they should be taxed as one. Unfortunately, it's not as simple as that, and that's why the legislation has caused so much confusion over the years. There are 3 main factors when considering whether somebody is inside or outside IR35: personal service, control, and mutuality of obligation. With personal service, the key to IR35 is trying to prove that it's a business-to-business agreement. It's 2 companies, 2 businesses, and therefore the contractor should be able to provide the services using whatever representative it sees fit. And basically what it boils down to is he should have what is called a right of substitution. So if he's unable to provide the services himself, he should be able to send a suitable replacement, and the client should agree to that. Of course, in reality, the contractor is likely to be a one-man band company, and therefore the client is going to expect that he's going to be doing the work, but it's vital that in his written contract there is this right of substitution, saying that if he is unable to work through illness or any other reason, he can send somebody else in his place. It's a very difficult one because you're trying to prove something that is purely hypothetical. It's very unlikely that anybody would ever send a replacement to do the work. But the vast majority of agencies now will have included a right of substitution in their contract. Most contractors will work through recruitment agencies, so it's a good start. Control is fairly self-explanatory. The contractor should have a level of control over how, when, where, and what he's doing. And a mutuality of obligation is something that's long confused contractors and the revenue alike. But it basically means there shouldn't be any ongoing obligation to provide or offer ongoing services. Despite the very high number of inquiries in the first few years, HMRC's record of winning IR35 cases where the contractor had professional representation was very poor. As I said, we have dealt with 1,300 and only lost 2, and that figure would be echoed for other status specialists as well. In the last few years, the number of IR35 inquiries dropped significantly, and in 2011 a Freedom of Information request revealed the actual tax yield from IR35 inquiries. So you can see it peaked in 2006 to 7 with 1.9 million. This is where the revenue have actually won their case and claimed back the deemed payment, unpaid national insurance and tax from the contractor. But in 2010 to 11, it was 219,000, 9 to 10, 155,000. So these really low figures resulted in very fierce calls for IR35 to be scrapped completely. What the figures don't show, however, is the amount of people who are dissuaded from using personal service companies because of the risk of IR35. There are dozens of umbrella companies in existence where the contractor is just a PAYE employee of the umbrella company, but from his agency and end client's perspective, he is still operating as a contractor. Nevertheless, the government did react to this pressure to scrap the legislation, and in July 2010 created the Office of Tax Simplification, which was tasked, amongst other things, with carrying out a review on IR35 to see how they can improve it. The Office of Tax Simplification was led by the eminent tax expert John Whiting, and it was made up of Treasury officials and other experts on secondment. They spent several months exploring all of the options for IR35, and drew on the experience of specialists in the sector, including Qdos. We were involved. And their report was finally released on the 10th of March 2011, and it basically gave two options for IR35: either suspend it with the intention to abolish it completely, or retain it and improve the way it was administered. So the contractor community obviously waited with bated breath for the budget on the 23rd of March, hoping that they could finally see the back of IR35, but the government did choose to keep it in place. They said that abolishing it completely would put substantial revenue at risk, and this will go back to my previous point about umbrella companies. Imagine if thousands of workers all left their umbrella companies to incorporate limited companies. It would make a huge difference to the Treasury's tax yield. Although the legislation was to remain in place, the government did state that they would make clear improvements to the way it was administered. They also made it clear that the ultimate aim was to merge income tax and national insurance, which would effectively eradicate the need for IR35 entirely. Obviously, this is a far bigger issue and not something that's likely to happen for a number of years. Recently, there have also been numerous high-profile cases of people using personal service companies where they really shouldn't. You had Ken Livingstone, the ex-mayor of London, Ed Lester, head of the Student Loans Company, not to mention over 2,000 public sector workers who have been in the news very recently. It's now very much in the public eye, so it's something that HMRC really want to address. So how did they go about improving IR35? Well, one of the first things they did was to create an IR35 forum, which was made up of HMRC representatives and various experts from the industry in general. The forum meets regularly to discuss IR35 and how it can be improved. We've not been involved in the forum itself, but people that we know who have say it's not particularly productive, and often there's too many voices wanting to be heard. Anyway, the forum has met on a regular basis, and we finally had some progress last month when the Revenue released their long-awaited business entity tests. You may well have seen these. They were effectively a way for contractors to check how likely it is that IR35 applies to them. It's like a self-assessment, and they're not actually submitted to the Revenue. It's all online. The contractor can choose to use them voluntarily, but they were instantly met with widespread confusion and condemnation. The test is made up of 12 questions, each of which carries an allocation of points. The contractor totals up his score and can then see which risk category he falls into. Less than 10 points is high risk, 10 to 20 medium risk, and 20 plus is low risk. This is all well and good, but the actual questions included and their associated points allocation have caused a massive amount of controversy. You may have read the tests already, but I will just quickly run through them if you haven't. So, test 1 is the business premises test, and it says, does your business own or rent business premises which are separate from both your home and the end client's premises? It's obviously going to be quite rare for a contractor in a traditional sense to have his own business premises. Most will work at their client's offices, some may work from home, but I can't recall any clients who have their own dedicated business premises. Obviously, if you do, that's 10 points. Test 2 is the PII test, so do you need professional indemnity insurance, which is fair enough. I mean, most contractors should really have professional indemnity insurance. Most agencies will require it contractually in their contracts, and you only get 2 points for that anyway. Test 3 is the efficiency test. So has your business had the opportunity in the last 24 months to increase your business income by working more efficiently, i.e. by finishing a fixed price contract early? And again, this isn't something that's going to apply to the majority of contractors who will work on a daily or hourly rate probably, rather than a fixed price agreement. And again, it gives you 10 points, but it's very unlikely to be relevant to contractors anyway. Test 4 is the assistance test and is worth a massive 35 points. And it asks whether your business engages one or more workers who generate at least 25% of your annual turnover. Now, the majority of contractors, as we said, are one-man bands, or they may include their spouse as a non-fee earning shareholder. Occasionally, you do get 2 people contracting through the same company, but the guidance says that to pass the test, the additional workers must not be directors or shareholders of the company. So effectively, they have to be bona fide employees, and therefore, again, it's unlikely to apply to the majority of contractors. The 5th test is the advertising test. So has your business spent over £1,200 on advertising in the last 12 months? Again, this isn't really how the industry works. Most contractors will just use job boards or use agencies to find their work, and you don't really see IT contractors and the like advertising in the yellow pages or anything. It's not something that tends to happen. Again, you could obviously just spend £1,200 on advertising, but you only get 2 points anyway, so it's probably not worth it. The next test is the only one that gives a minus score, and it's basically asking if you were an employee of the client that you're working for. So in the last 12 months, were you a PAYE employee with no major changes to your working arrangements? If so, it's minus 15 points. Switching from employment to self-employment at the same place is always going to be fraught with difficulty, so this one does make sense. Test 7 is the business plan test. So does your business have a business plan with a cash flow forecast and separate business bank account? This is something that would be quite easy for contractors to do, but it's only worth 1 point. Test 8 is the repair at own expense test. Would your business have the right to bear the cost of having to put right any mistakes? This is something most contractors could actually say yes to. They will normally have a clause written into their contract to say that they should put right any mistakes at their own cost, so you get 4 points for that. Test 9 is the client risk test. So this is a bit of a funny one, and this one has drawn a lot of condemnation from contractors. So basically, to pass it, you have to have been unable to recover payment for work done over the last 24 months, which was in excess of 10% of turnover. So it's basically a positive if your agency's gone bust and you've not been able to recover money. So that's drawn a lot of criticism. Test 10 is the billing test, which asks if you invoice work before being paid and negotiate payment terms. It's worth 2 points, and a lot of contractors will pass it, although some agencies, recruitment agencies, do use self-billing systems which do away from the need of invoices, but most people will pass this one. Then we have the right of substitution test. As I said before, it's vital that you've got a right of substitution, so it's perhaps a little bit surprising that this one's only worth 2 points. That's basically saying, does your business have the right to send a substitute? As I said, most contracts will include this right of substitution, so most contractors could probably say yes to it. That's probably why test 12 is the actual substitution test. So have you actually hired anybody else in the last 24 months to do the work you have taken on? Unsurprisingly, incidences of substitution actually being carried out are very rare, so this is another test that few contractors will pass. However, it's always worth pointing out that if a contractor ever does have the opportunity to send somebody else in their place, even if they're effectively engineering a substitution, so if for one day he can send somebody else, get his client to agree to it, get it all documented, obviously the client would have to agree that the substitute was suitably qualified and experienced. If you've actually carried out a substitution, even if it is just for a day, 9 times out of 10, the revenue will go away as soon as they know that. It really is the golden bullet when it comes to IR35, so it's always worth bearing in mind. So they're the 12 tests, and you can see why they've drawn a lot of criticism. This would be one of our typical contractors who just about scrapes through into medium risk. But that is only if they have the business plan and they invoice. A lot of contractors will fall into that high risk area. But what does it actually mean? Well, our advice is that it isn't something that contractors should get too hung up about. It is something that they should certainly be aware of, but as I mentioned earlier, they are a guidance tool and they're not going to be used by HMRC in selecting people for inquiry. The Revenue did also release 6 IR35 scenarios in their traditional way, where they have imaginatively named people doing, they've got Juanita, Hamish and Qdos, who are apparently contractors, and it will, the Revenue say allows people to view the business entity tests in some context, so it's always worth contractors reading them. The key point to bear in mind, though, is that IR35 itself has not changed. The legislation is unchanged, so individual cases will still be argued on the same basis, and all historical case law is still relevant. What everyone does need to be aware of, though, is that the Revenue are putting a lot of resources into the policing of IR35 going forward. So there's going to be a sharp increase in the number of inquiries that are going to be carried out. They've created 3 teams of specialist inspectors with 12 officers on each team. They're going to be tasked solely with IR35. And it's guesswork, but each officer could probably undertake around 50 cases per year, which means that we could see close to 2,000 IR35 inquiries in a year, which is massive compared to what we've had in the last few years. The Revenue have confirmed that the new inquiries won't be industry specific, so they're likely to, so contractors across all sectors are likely to be involved. Historically, many inquiries have originated from the Employer Compliance Review, which is obviously the routine inspection of the company's PAYE affairs. With contractors, the Revenue tend to use them as a foot in the door to move on to IR35 matters. The officers undertaking the initial review will often gather basic information about the contractor's engagements while taking instructions from a status inspector working in the background. Going forward, it's likely that some reviews will start with an ECR. However, the Revenue will also be sending out direct letters informing contractors of an impending IR35 inquiry. We actually had our first for one of our clients on Monday. So they're going out now, and there's been a few more that have been documented in the press. So, if you do have contractor clients, you may well see these letters coming through. At the start of each review, the Revenue are going to ask the contractor why they have considered themselves outside IR35, and they'll ask for them to explain that in depth. If they provide sufficient evidence and the Revenue accept this, they will look to close down the review as soon as possible. Interestingly, the Revenue have said that if the contractor would then be exempt from further IR35 reviews for 3 years, which is obviously a positive. One of the main bugbears of IR35 inquiries in the past is the sheer length of time they've taken to conclude. We've had cases running for several years, which is obviously highly stressful for the contractor. One case, which was actually concluded last year, had gone on for 8 years, which is ridiculous. But the Revenue now have been quite clear that it is their intention to close down inquiries as early as possible. This does mean, though, that they're going to be likely to use their inquiry powers as early as possible, which means contacting the end user, which is always the danger zone for contractors. If you have unsupervised contact between the Revenue and the person that the contractor's working for, they will almost always put their foot in it somehow, because the Revenue are always going to ask very leading questions. They will know that the person in HR or the legal department, the client a contractor works for, will probably not be versed in IR35, and that's often how problems arise. And the Revenue have signalled that they won't be afraid to use those inquiry powers at a very early stage. In terms of how they're going to select contractors for inquiry, they're going to use their risk assessment criteria to profile high-risk cases. Nobody actually knows what this entails, but obviously the Revenue do have various sources of information that they can work and draw on. Given that the specialist teams are likely to be working very closely together, they may also be slightly more intelligent than they have been in the past at sharing information. For instance, if you have an organisation where there are 50 contractors, say, and one of them is caught by IR35, you may well see that domino effect of the revenue going after every single contractor who's working there. And that's not something that they've done in the past for some reason, but if they're all working together now, it may be that you start to see that happening a lot more. They may also work from tip-offs from contractors. We recently dealt with a very disgruntled contractor who was threatening to blow the whistle on all contractors working for the Ministry of Defence. It can happen. The revenue have already selected their first batch of targets. They know who they're going to be contacting. We've had those letters go out already, so it really is imminent now. As I mentioned earlier, the use of PSCs has become more prevalent away from traditional contracting with the Mayor of London and TV presenters, sports people, so there's likely to be some activity in those sectors as well. So whatever happens, it's going to be a very interesting few months. So what is our advice for contractors? Now is the time to really ensure that everything is in place to put the contractor in the best possible position if the revenue come knocking. The written contract is the first port of call. The revenue will always look at that first. The contract that's going to be either between the contractor and his agency or the contractor and the end user if he's going direct. So it's vital that that contract is reviewed and is reviewed by an expert who knows about IR35 and all of the clauses are checked over. It's also important to build up as much other evidence as possible to point them towards being outside IR35 and in business on their own account. If detailed and accurate material can be produced at the outset, it will stand them in very good stead. Obviously, insurance covering the cost of any inquiry is also worthwhile. A contractor should never deal with an IR35 inquiry themselves. They should always have a specialist. And obviously, paying a specialist or an accountant will end up being very costly, even if they are ultimately found to be outside IR35. At Qdos, our flagship insurance policy is called tax liability cover, and that covers not only the legal costs in defending them, but also the tax, interest and penalties if they are subsequently caught by IR35. So basically, if they're found to be inside IR35, they don't have anything to pay. So it's always worthwhile considering these. Obviously, the contract reviews, it's vital that you have the contract reviewed. We've got a deal with ICPA, which I think Tony will tell you about, where you get discounted reviews for your members. So that's always that's something that every contractor should consider. So that's it. Have you got any questions?